BLOCKCHANCE 2021.
Steven had top positions for industry giants like Goldman Sachs, Brevan Howard, Winton Capital, Credit Suisse, and JPMorgan. He spent his entire 25 career thus far working in financial markets in London and New York, only to leave the traditional world of finance to get involved in the crypto and blockchain industry. He is a key figure in educating and advising the leadership of Fortune 50 companies on their cryptocurrency and blockchain strategies. Steven will speak to us today about why institutions need to get serious about cryptocurrencies. Let's give a warm live welcome to the virtually streamed Steven Stonberg. Steven, can you see me and hear me?
I can indeed. Can you see me? Can you see the presentation?
I can, and yes, I can see your presentation. Everyone, welcome, please, Steven Stonberg.
Okay, great. Thanks. Pleasure to be with you virtually today. Obviously due to COVID, it was a bit challenging with every new variant they come up with to travel. But happy to be here today. And today, I think my topic is why institutions should get serious about cryptocurrencies. So, you hear a lot about, I think, the crypto space, more for crypto retail and NFTs, but really, I think the big story coming in 2022 is all about institutional adoption and what I call convergence between sort of the traditional financial world and the crypto world. So I think today I want to talk a bit about institutional adoption, the future, and a little bit about Bittrex Global and how we see our role in that. So I think right now we're really at an inflection point for crypto. Retail and institutional adoption is really only set to grow, both for cryptocurrencies and for blockchain technology, which, crypto is just, to me, the use case right now of blockchain. Blockchain is a real story. Right now, you have about 21% of banks using blockchain for settlement or transfer of funds. And that's actually a lot compared to the banks, 2 or 3 years ago when they wouldn't do anything, or they were calling it rat poison. Now they seem to be changing their tune, now that their clients are actually getting very involved. They have no choice. But you can see blockchain technology is already being tested or leveraged for many back-end processes by banks. And remember, the banks have really awful back offices that they've kind of just been taping together with spit and glue for the last 50 years. So blockchain's a chance for them to really innovate finally. There's a lot more room to grow for retail cryptocurrency adoption. Right now, only 7% of Americans are using cryptocurrency. In places like Nigeria and Vietnam, where there's a lot of underbanked, you see a lot higher penetration of crypto. And everyone from Amazon, Apple, JPMorgan, which is the one that called it rat poison, now they're embracing it. And they're hiring individuals with cryptocurrency and blockchain experience. Institutional adoption. I think this is an interesting quote. Retail is selling on exchanges while institutional investors are simply not buying as much as before, but rather than selling. And so this is from Philip Gradwell, who's the Chainalysis chief economist. So this is in the May sell-off. So I think you're seeing less volatility in crypto. It's still a highly volatile asset class, but the institutions are just buying and holding. So the more you see institutional investors coming in who are holding, you're going to see a lot less vol. The retail investors, obviously, and that's true in the real world, in equities, they're creating, they buy and sell, they don't hold. They panic a lot more. Hedge funds. So 20% of hedge funds are already investing in digital assets. They're actively getting involved, and they typically move more nimbly and quickly than the long-only money. So you're seeing major hedge funds such as Brevan Howard, Paul Tudor Jones, Point72, which is Steve Cohen. They've either invested in crypto or they're considering launching funds in crypto. And a recent survey showed 70% of hedge fund CFOs said they expect to invest more than 10% of their investment holdings in crypto in 5 years. If you look at the hedge fund industry AUM, that's a massive amount of inflows into crypto. Ray Dalio, great quote, said, "I'd rather have Bitcoin than a bond." And I think this is even more true given all the central bank printing. Carl Icahn said, "Crypto assets are here to stay in one form or another." And Mark Lassery from Avenue Capital said, "The probability is more and more people keep using Bitcoin is it's going to keep moving up." And I think that's proven pretty true this year. Trading and investing. So Bitcoin's been the best performing asset class in the last decade. Institutions are taking a second look. Goldman is launching a crypto derivatives trading desk. They're now moving beyond Bitcoin, launching Ether futures. Fidelity will be launching a Bitcoin ETF. Invesco is launching a cryptocurrency economy ETF. State Street, and these are pretty boring names, right? which is in a good way. Like they're now getting involved with State Street Digital, focusing on crypto, CBDCs, blockchain and tokenization, and even Standard Chartered, a big boring commercial bank, even planning to establish a cryptocurrency brokerage and exchange platform in the UK. So I think you see these big names, which 2 or 3 years ago, all were saying this was awful and they wouldn't touch it. Now they've kind of just all come lumbering in. Again, they don't really have a choice. Their clients are leaving and will go to crypto-only platforms if they don't offer these services. Wealth management. I think it must be awful to be a wealth manager now, pushing your 5% return in your balanced portfolio when you look at assets like Solana going up 10,000% in a year. That must be a really awful job right now. But you're also seeing with millennials, 47% of all millennials store a quarter of their wealth in crypto. So if you want to actually stay relevant, you've got to be in crypto. Morgan Stanley is now allowing clients to invest in 2 crypto funds. So they're just dipping their toe. They're typically adding just a little bit of exposure for their ultra high net worth. So over time, you're going to see this much more integrated. They're going to have to. Again, they're going to lose AUM and they can't charge fees if they're holding their Bitcoin at Coinbase and not at Morgan or Goldman. And UBS are both, and Citibank are both exploring cryptocurrency. Again, they have to. Retail banks, traditional retail banks are not meeting the demand from their customers for crypto. 60% of crypto owners want to use their own bank to invest in crypto, but they can't, unless you're in a fintech bank. So banks can see the writing on the wall. Their customers are sending their money, they're wiring it to Coinbase or to Bittrex or to somewhere else. Crypto purchases through bank accounts may be on the horizon, with custody firm NYDIG rolling out the ability to buy and sell Bitcoin directly through a bank account, and traditional banks are slow to move as usual with no notable major announcements. And we're seeing a lot of new institutions entering the market. As incumbent institutions wait to offer cryptocurrencies, new players are entering the market. There's 150 to 200 active dedicated crypto hedge funds. 81% of those were launched in the last 3 years. You see new firms like Grayscale and Bitwise that are launching ETF products. Remember, Grayscale didn't even exist a few years ago. They're probably the largest asset manager now in crypto. And you've got RIAs getting involved. Fintechs, PayPal, Square, now renamed as Block as of yesterday. Revolut and Robinhood are filling the demand for cryptocurrencies from retail. And the exchanges, obviously, like Bittrex and others like Coinbase and Kraken, are filling in the demand for cryptocurrencies from institutional investors. So where do we see the future? Well, I think in securities tokens, we've only talked about utility tokens, but you can see equity markets, the way they exist, you've got really inefficient clearing systems. They're complex, trading is small. Volumes can be expensive, and it takes multiple days to settle equities still in 2021. It's inaccessible for many people around the world. When markets are accessible, they don't provide the option to buy fractional shares. So even if you could access like Tesla stock, unless you have $1,000, you can't buy a share. And that doesn't really work in a lot of these emerging countries like Nigeria, where people don't have that kind of money. And trading can be really costly, charging large fees per trade. And markets in equities are not 24/7 like they are in crypto. So by definition, they're pretty inefficient. So crypto can be used to democratize the traditional financial model. So right now, you have, and we offer on Bittrex Global, tokenized stocks. Again, we have fractional digital version of Tesla. So it's not actual Tesla stock. It's a token that represents Tesla, but you can buy it in pieces, small, like any sort of token. And it trades 24/7. And we have tokens that represent gold, Bitcoin, obviously USDT. So here is kind of like what a balanced portfolio could look like that you would normally see from a wealth manager. But you can now, and it's still early days, but over time, you can start to see how the whole thing can be done on the blockchain with tokens. So if the banks don't offer this, then somebody else will. So I think clearly this is the direction the markets are moving. In the future impact of tokenization, you're going to have lower costs, and the requirements associated with raising funds for companies in comparison to equity markets, and I'll talk about that in a second. You open up the opportunity to make any asset class accessible and liquid. So like right now, real estate or art or anything can be tokenized. So if you have security tokens, you can start to create liquidity and global trading for any asset class. Think about that. And it's obviously trackable and very transparent. So security token offerings, this really is like not happened yet. It's just beginning. So I think, yes, you can do securities tokens in theory, and there are a few out there, but the market hasn't taken off. But I think this is really the space to watch. This is going to explode. So, you had originally initial coin offerings. That was a huge craze in 2017. The regulators didn't like those so much. Then they've been rebranded as initial exchange offerings, which, again, that's the way right now you can bring utility tokens to market. And now you can certainly extend that technology to security tokens. Now, the problem with security tokens, the token's the same. It looks just like any other token. It could be an ERC20 or whatever chain you want to use. The difference is you've got to obviously trade it, and that has to be done in a licensed legal way because these are now securities. And then when you sell them, you need licenses to sell securities. Now, obviously, people are offering these now without licenses. Half of the crypto industry just does what it wants and doesn't. We're very supervised and regulated. So I think this, if you want to do this correctly, this is a lot harder to do than utility tokens. But we're working on this problem. A lot of people are, and the money and the just efficiency that you can be gained by this, you can clearly see this space is going to explode. And again, with security token offering, think about it. You can make fundraising really easy and economical, track ownership, reduces fraud, and you have fractional ownership. It also will totally upend the way we do finance. Think about it. You could effectively IPO, that's all an STO is, but instead of waiting till you've done your venture round, your angel round, and then multiple rounds, get the company to a certain size, and then you can go to work with some bank, pick which market you want to IPO in, you could just on day one STO. So you can cut out the VC, literally the startup could do an STO. It's like almost like crowdfunding. You can sell equity in your company. So I think this is really going to be very disruptive to financial markets, just the way Bitcoin is, but this is even more disruptive. This is their bread and butter. Obviously, DeFi is another sort of hot topic. It's a new way to execute financial transactions. Bittrex Global are centralized exchanges. So we take the kind of centralized banking model to apply it to the blockchain. DeFi is this new way of doing things. I think whatever you think about DeFi, you have to look at the growth just in that sort of, over a year period. From May, it was 954 million in total volume of transactions to 110 billion in just over a year. And that's incredible growth. So this is going away. You're seeing decentralized exchanges, stable coins, lending platforms, yield farming, liquidity mining. I think the challenge for these platforms is going to be the regulation. They will look at form over substance and say, this is a centralized activity. So for the moment, I expect continued explosive growth. And then obviously this is going to be applied across utility tokens, security tokens. So really exciting and highly disruptive to these institutions, which is why they're going to get involved. They can't afford not to. And you have this interesting quote, DeFi could be more disruptive than Bitcoin to the financial sector. That's pretty obvious. That was the ING blockchain head, Hervé Francois. So just a little bit about Bittrex Global and how we fit into this. So right now, and again, we're very focused on building an institutional grade platform, open for retail, but we want to appeal to the institutions. And I come from that background, and they want a counterparty they can trust. We set up in Liechtenstein, AAA rated jurisdiction. We're supervised by the bank regulator there, the FMA, under the Blockchain Act. We have another license in Bermuda, supervised by the BMA. These are two real-world banking jurisdictions that institutions can face. They don't necessarily want to do trades in the Seychelles or Antigua or these other jurisdictions where some of our competitors are set up without licenses. So we have 3,000 institutions already trading with us on digital assets. And you can see here's a bit of our map and our footprint. So we have offices all over the world, but our main sort of supervised jurisdictions where the trading takes place right now, it's in Liechtenstein and in Bermuda. Again, those are very high quality jurisdictions. We're the only ones that we know of that are licensed in either. It's not easy to get these licenses. And we do full KYC and AML up to the highest standards. And we're very institutional friendly. So right now we have over 250 digital assets. Those are mostly utility tokens, but we are doing some leverage tokens, 25 of those. Those are all out of Bermuda. We have US dollar and euro markets, APIs, advanced security, crypto lending, and Bittrex has never been hacked. So we're not about being the biggest or the most sexy. We want to be, in a good way, a boring platform for institutions that they can feel comfortable trading with, but that offers them the products and the services that they need. So that's all I have to say in terms of the presentation. I don't know if there's time for Q&A or how you'd like to do this now.
Hi there. Can you see me? Thank you so much, Stephen. We don't have time for a Q&A, but we appreciate you joining us. A round of applause for Stephen Stonberg.
Thank you.
Thank you so much.
BLOCKCHANCE 2021.